of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Friday morning, everybody. I'm Tommy O'Brien coming to you live from TFNN, 9:06 a.m. Friday morning. We just got the jobs number. We'll get into that in a moment. Markets kicking things off in negative territory. Quite the day yesterday as markets accelerate higher. You're looking at an S&P. We dived down about 50 points from where we were pre-market yesterday to the intraday low of about 4,072. You then have the market trade up over 100 points to above 4180. Since then, it's been a slow drift to negative prices. We got some volatility coming off that jobs number. We'll get into it in a moment. We just bounced to a 50% of that entire acceleration from last night. You zoom in on the action just this morning. Volatility, we initially spiked higher to 4160, and then just like that, the S&Ps give up almost 30 points. We're negative by 36 on the session right now. That's about 9/10%. You have the NASDAQ leading the way off 1.25% right now. We're talking about a yield of 2.975% on the 10-year. We'll jump over to the chart in a moment. The Dow right now negative by 200. You see all the markets slightly under where it was. They're calling it like a sweet spot, Goldilocks-ish was the term they were using on Bloomberg when I was checking out a moment ago, getting the numbers. And if it's a Goldilocks type number, then why can the market barely move positive or anything? We're still adding 390,000 jobs. Let's get into the headline right now. Why not? Payrolls rising 390,000 in May, better than expected. There's a lot in this number. I was chatting this morning just with some friends on a group chat after the number, saying no matter what numbers come out right now, if they're this nuanced, there's almost something for everybody in here. And that doesn't mean that everybody's going to be right, but you can interpret this in many ways. And man, you're still adding 400,000 jobs, folks. We just saw yields rising. Okay, you had Brainerd out there saying that they will not pause, that they will be ferocious to tame inflation. What was that, just yesterday she was out there? If you're talking about an unemployment rate at 3.6%, you're talking about 390,000 jobs added. Marco's looking for 328. Average hourly earnings, 5.2%. Basically in line with expectations, 0.3% for the month. Market was looking for 0.4, but year over year, 5.2%. So keep in mind, the headline numbers, without adding all the nuance that may point to a trend that the market, the economy may be cooling a bit, the headline number is that the market is adding 400,000 jobs a month with people making 5.2% more than they were just a year ago on employment. And meanwhile, you have an unemployment rate at 3.6%. That is a tough one if those numbers persist, because that is not the type of number or numbers that will tame inflation to what the Fed probably needs. Now, yes, there are numbers in here that point to that. But my take, folks, giving you that headline number, the market's adding 400,000 jobs, man. At some point, we have to have some pause. And adding 400,000 jobs with an unemployment rate at 3.6% and wages rising year over year at 5.2% still seems pretty hot, rightfully so. Labor force participation edged higher, rising to 62.3%, though still 1.1 percentage points below February of 2020. So the market liking that, the Fed liking that. That's one of the components in terms of labor force participation rate edging higher in the slightest. Breaking down some of the areas, leisure and hospitality leading the way, adding 84,000 positions, professional and business services rising by 75,000, transportation and warehousing contributing 47,000, and construction, 36. Retail trade took a hit on the month, however, losing 61,000 in May. That sector remains 159,000 above where it was in February of 2020. So that number out at 8:30, we give you the market. Pretty interesting, right? That you kind of have a slight drift down, but you're talking about within I guess it's 15 points lower now from where you were. Market was down about 25 points coming into that number. You're trading at 41.35 right now. NASDAQ right now, negative 172 points. Crude holding up relatively well at 117.43 right now. Gold off a bit to 18.63. And we jump to notes and bonds. That says it all, folks. The market sees a higher 10-year yield on that number. We're now at 2.981%, 2.981. You just had the 10-year trade off 15 ticks in a heartbeat on that number. And there was a brief spike, I guess you could call it, on that number initially. But man, that's a tough one for sure. And folks, send some white light out to our Tiger White Shark in the den, dealing with a little COVID deal, getting over it. He's going to be well. He's got his meds now. He's resting, but send some white light, White Shark. We're sending it for you, man. Get well, for sure. All right, let's jump around to what else we have going on. Before I jump to even the numbers, some of the companies that were out last night, some interesting numbers and reactions. CrowdStrike out with their numbers. You're negative by $8 this morning. You had Restoration Hardware out with their numbers. You're down $10 this morning. Lululemon with some really strong numbers. They trade lower, though, almost. Not quite yet, I guess. You're up by $2. And this is a scenario, folks, and we'll pull up the numbers for these companies. Lulu crushed it, in my opinion, on the numbers last night. I was somewhat skeptical, thinking of making a trade on this equity. I did not. But the logic was going to go that you got an equity dealing with some serious multiples here still. I think you were at a PE of 35 or 40 coming into that earnings event. You're in retail. You're in athleisure. Now, athleisure has been persisting well. They really had a strong earnings event last earnings quarter. You can see how it traded lower. But the logic going, that maybe some of our shopping tendencies shifting, as was the case in Target, as was the case in Walmart. Maybe their margins are going to potentially be hit, right? These are all biases. They get confirmed or denied come earnings. And boy, those numbers denied everything about what I was thinking. And the market can barely trade positive by a couple bucks. Now, you got the market down 1%, so that's bringing this equity down as well. You got the NASDAQ trading lower. The multiples on Lululemon are going to trade that lower as well. But boy, it is a tough environment right now in this market when you can have the numbers that Lulu had and you barely trade up by $2, in my opinion, for Lululemon. And again, back, Restoration Hardware, this thing's been struggling. You were just at 236, though. I talked about some of these equities, right? Like CrowdStrike in particular. You just take a look at a 10-day, 30-minute. You go from 135 to come into earnings at 172, right? Is that the low 135? I think it might be. Well, you were down at 130. What is this low here? Yeah, about 137. That's May 25th. You were trading at 137, and you came into earnings at above 170. It's tough expectations. You're going to open at 166 relatively well, considering where you've been recently for CrowdStrike. Restoration Hardware, you just traded from 236 to come into earnings at 300. That equity traded up, $64. Almost a 30% pop in the final 5-6 days coming into earnings. So they're going to give up about $8 on their numbers. And Lulu, you were just at 250. You gained exactly 20% coming into the numbers. They were at about 300, 250 to 300. So huge numbers for these equities coming into their earnings. And it looks like they all may give back a little. It'd be interesting to see how Lulu opens as you got markets in negative territory. Excuse me. S&P's negative by 41. It's going to be an interesting open, folks, to say the least. Back to a 15-minute chart to see the action. Sitting right at the 50% retracement of the entire move higher yesterday. And that move higher, folks, that was about, what was it, 117-point run in the S&P from low to high yesterday. Stay tuned, folks. We'll be coming back.
In a time of booming inflation, where your purchasing power is eroded, there's no better place to protect your hard-earned money than in gold. VISTA Gold's flagship asset is the Mount Todd Gold Project in the Northern Territory of Australia. This is Australia's largest undeveloped gold project. We are talking a world-class gold project in a Tier 1 mining district. This is a large-scale, low-cost project with significant existing infrastructure in a politically safe and friendly mining jurisdiction. VISTA Gold just completed the Mount Todd feasibility study, which resulted in a 7 million ounce gold reserve in a 16-year mine life. All of this, combined with the approvals of all major operational as well as environmental permits, This distinguishes Mount Todd as an attractive, de-risk partner, ready development stage gold project. VISTA Gold trades on the New York Stock Exchange under the symbol VGZ.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com. Educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Welcome back, folks. We got the market right now. S&P's negative by 40 points, trading at 41.35. NASDAQ 100 negative by 175. Dow off 230. We got yields climbing 10-year right near about 3% right now. Let's jump around to some of the FANG stocks. Amazon's had quite a run recently, man. You trade up to 25.38 overnight. Right now, you're down about $14 pre-market. You jump to Google shares. Google down about $20-25. Microsoft started the negative action yesterday, man. Would you have believed me if I told you that Microsoft was going to close positive yesterday when I was on the air? I mean, remarkable, right? So you get a sell-off on Wednesday that closes out the day at about 272. You get the news right as I was on the air because futures started trading lower at 9 in the morning. Wasn't sure really what was driving it. It was Microsoft cutting their guidance. Microsoft trades from 275 down to 262 on the open, and with the market charging higher, it closes at 274.58. Absolutely remarkable turnaround. This morning, you're down $3.50 potentially for Microsoft on the open. All right, of course, another day in the markets, and we got to talk about Tesla and Elon Musk. So, news comes out. Let's get over to the headline. Tesla. And this one's just not rhetoric, folks. It is a reality for sure. As Elon sends out a note pausing all hiring worldwide, says the company's going to need to cut staff by about 10%. They have 100,000 employees. That's a 10,000 job cut. He's kind of shooting from the hip, it sounds like, but you never can really know in terms of what is going on. He was just out, of course, talking about everybody needs to come back to the office and no working from home, or we'll just consider that you've quit. So he's lighting the fuel to the flames over at Tesla. It'd be interesting to see how this one plays out. Noting that he had a quote-unquote super bad feeling about the economy. He's the CEO. He's entitled to have that feeling. A lot of other CEOs would get punished pretty hard if they were shooting from the hip like Elon is, firing 10,000 workers because they had a super bad feeling. Meanwhile, they were going after Twitter, etc., right? Maybe the CEO shouldn't be going after Twitter and tweet storming all the time if he's going to be cutting 10,000 workers from the company. I'm not saying that, but you can see what he gets away with, man. Anybody else would be ripped apart if they had been doing recently what Elon is doing and then coming out and saying he's got a super bad feeling and we're going to have to cut people. And I'm not saying that it's part of the Twitter deal, man, but he just gets away with craziness in terms of what he's able to do as a CEO of a publicly traded company. And now 10,000 people are going to lose their jobs. He's going to get them lean. Maybe the numbers are lining up with what he's talking about. Maybe it's not just shooting from the hip. We will find out eventually, but nonetheless, Tesla negative yet again, right near yesterday's low. That's some volatility for you, man. 5, 6, 7% on a daily basis. Some equities trade that large, folks. Not usually equities that are at the market cap valuation that Tesla is. Meanwhile, that represents such a large swing in market cap. Not usually the case. But nonetheless, it's Tesla, as we know. All right, let's jump around and see what else we have going on. Yeah, Coinbase, similar deal. They're going to rescind employment offers, extend a hiring freeze. You had Gemini Trust announcing a 10% staff reduction. This one's different because it's crypto, folks. I would stay away from Coinbase. All right? I would stay away from it from an investor perspective. I would stay away from it having any type of assets in there at all because they've already said if they go BK, they're going to take all your money. From 368 down to 73. Now, here's what to keep in mind for this thing. Is that the last time that Bitcoin was at 30,000, this was the area in terms of about 250 that Coinbase chopped around in. Bitcoin is holding somewhat relatively well in terms of sitting at 30,000. As I mentioned, that's where Bitcoin was in the middle part of 2021. Coinbase is far below that level, okay? The slowdown in crypto trading, everything, is much more dramatic than even when it had that first dip, because it's been waning for some period of time now. And all the talk in terms of putting, they put that phrase in there for a reason, folks, that if they go BK, client funds would become general creditors, okay? They put that in their quarterly announcement for a reason. That led to a spike down to 40.83 on that earnings. There's your volume spike. You want to see a volume at lows? How's that for a volume at lows on a weekly basis on their earnings? Stay away from that one, folks. All right, S&P is continuing to drift a bit. We're negative by 45 points right now. You're coming right down at session lows. NASDAQ 100, you're off almost 200 right now, 12,705. We jump around to what else I have going on. Some of the other numbers in here for the jobs report. So this is the live update. Where were we? I was at the top. They've probably just been updating it. Yeah, they sure have since I was in here. Differing sectors of this economy. A positive sign, participation rate for prime age women. That rate continues an upward climb, so that's 25 to 54 women. What did happen is I saw black unemployment actually rising. Let's see where we go. Yeah. So you had the participation rate for black women rising to the highest level since COVID-19, and the rate for black men rose to the highest level since 2019. Black unemployment ticking up to 6.2%, but that is participation rate. That would be something that the Fed maybe may like, that participation rate coming back into the economy. I would agree with this one, and I would said it before I even came on the show, so that was at 9:07. Rosenberg from BlackRock, Rosenberg from BlackRock, 390. Job market still too strong. From an investment perspective, it's too soon to look at bonds as a good hedge right now. They've still got to adjust, he says. The jury is still out on the inflation trajectory. 400,000 jobs, folks, on a monthly basis is not going to bring this economy back to where it needs to be for the Fed. Too hot. The problem with it is that the area for a sweet spot right now is just so thin, man. You have to have a little bit more slowdown in this economy to bring down the inflation for what the Fed is looking for. I don't think this number gets it done, even though it's pretty decent. And the market reaction kind of agrees, I would say, right now with rates, yields climbing to almost 3% on the 10-year, and the market getting a little bit soft off 44 points. I mean, we're almost at 4,200, folks, in the S&P. You take a look at where we've been recently, all right? All that is, let me pull off some of these for a little bit of clarity. All that is a 382 of the entire move lower from March 29th. And I didn't even take the extreme low. I kind of took the lows of the bodies from May 12th, 19th, 20th, 23rd, and 24th before we kicked off to higher prices there. All we did was get up to the 382. We chopped around there for about a week from May 27th, struggling to get above 4,200 in this market. Probably rightfully so, considering the variables that we have in play with an economy that needs to soften, inflation that needs to come down, and meanwhile, we're adding 400,000 jobs a month. We have year-over-year wage gains of 5.2%. Job openings, still pretty dramatic number in terms of jobs open. So we'll see where we go. But it's going to be an interesting open as markets picking up steam to the downside. With 3 minutes and 30 seconds to go until the opening bell, we got markets at pre-market session lows. S&Ps now off 1.1%. NASDAQ off 200 points, we'll call it. That's 1.5%. Dow off 0.8%. Stay tuned, folks. We'll be right back for the opening bell.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, JDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
Tom O'Brien has just announced a live Timing the Trade webinar Friday, June 10th from 9 a.m. until 2 p.m. Eastern Time. Join Tom O'Brien for 5 hours of live education as he teaches you his trading methodology right from his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. In this live webinar, Tom O'Brien will be teaching you his entire trading system, including quality volume, ABC structures, Fibonacci confluence zones, cause and effect, swing points, and more. We will be limiting this class to 40 attendees, so please do not delay and reserve your seat today for this special live event with Tom O'Brien. All attendees will also receive a physical copy of his book, The Art of Timing the Trade, an $88 value, mailed to you, along with a free month of his daily newsletter, Market Insights, a $169 value. For all the details and to reserve your seat today, visit the front page of TFNN.com. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open, and they open at session lows. You got an S&P right now down 50 points. NASDAQ 100, 236 to the downside. You're off 1.9%. Dow off 254. You get the Russell off about 15 points right now. We jump to commodities. Crude holding pretty well at 117 right now. We jump to the gold contract. You bounce off 1860. We're at 1864 in gold. And we jump to notes and bonds. A little bit of a bounce off of where we were in terms of lows. You make it down to 118.11. We're at 118.16 right now. Yields 2.964%. We could easily get to 3% today, folks, with the S&P falling off to 41.23. We jump over to the VIX right now with some negative action. VIX 24.33 yesterday. We're at 25.61. You take a look at the daily. Just want to point out that was the lowest area we've seen on the VIX since April 22nd. Nowhere in May did we see a 24 handle in the VIX. We got it yesterday. We're chopping around a bit right there on that area on the volatility index. All right, in terms of what else we're talking about, jumping over to Walmart. Another article I was reading over there on CNBC this morning. I talked a little bit about this yesterday. They're going to open new fulfillment centers over the next 3 years that the company says will let it pack and ship online orders more quickly. The first one is going to be in Illinois, about 40 miles southwest of Chicago. You know, from a longer-term perspective, folks, for a dividend stock of Walmart, it has 31 facilities that prepare online orders, but more than 3,500 of its stores also fulfill online orders. I think they have 4,700 stores worldwide, maybe too many in terms of what they need, where the economy is going. But you check out Walmart, man, they drop out of bed on those earnings from 148 to 117. You bounced a bit, you back this thing up, and you can see Walmart trades basically right back to pre-pandemic levels of 120. You got it all back. You trade to that level. You chop around right at about the 618 in terms of where you are. Now, Walmart, what do they have going on here? It looks like a 55-cent dividend. So what are you making? $2.20 is what you're making. What's that? Almost a 2% dividend a year for Walmart at 127. Yeah, just under that for a company. When you talk about it, okay, Walmart, market cap-wise, $350 billion. Contextually, in terms of where they are and who they're competing with, it's a tough go-around for Amazon. But I imagine they will close that gap at some point because Amazon does need a competitor. And I imagine that Walmart is one of the only companies that could actually realistically have a shot at competing. All right, we jump around to what else we got going on. In the world of, and this is just not Tesla, it's everybody, folks, but pay attention to what you put out there on the internet. Tesla monitored its employees on Facebook with help of a PR firm during the 2017 union push. Shouldn't be surprising, but it's nice to get it in writing and be reminded. You know, when you put stuff out in the public, folks, anyone can be watching. If you're an employee, you know, I'm sure that people would be up in arms in terms of this being allowed. The company's allowed to do that. And that's a whole other conversation, okay? The only conversation I'm talking about is just be aware that what you put out there, of course people are watching it, okay? And when there's a lot at stake, they're going to be watching it even more. They conducted research specifically on organizers on social media in 2017 and 2018. They watched closely for Tesla, where discussions on social networks alleging unfair labor practices. Of course, they'd be watching everything. The money at stake for a company like that, very incentivized to spend some money on a PR firm to make that happen. But always interesting, you actually see it literally in writing. Yeah, let's jump over to Tesla. Whole market's bouncing a little bit right now. S&P is only down about 36. Tesla, they get back a few dollars of the losses. I guess that's a bounce. It's a bounce to where we were at 9 in the morning to 740. You were down to 726. Market's pretty much right where we were prior to the market. Small companies, this is a tough one. Lose almost 300,000 jobs since February. Now, this number was out yesterday. Okay, so this had to do with the ADP. I think the jobs number, though, on small companies was not that beneficial as well. Let's see. Yeah, well, I'll jump back to that one, but this one's just talking about on the ADP, because ADP had numbers that were harsh as well. Fewer than 50 employees have lost almost 300,000 jobs. This is from the ADP Research Institute, showed yesterday, 91,000 coming in May. Not sure that's indicative of the strength of this economy. It is very tough, the period we've come out over the last 2 years, and with the economy ratcheting higher, costs ratcheting higher, you can see that maybe big companies able to withstand that volatility more than small companies, right? Small companies working month to month, paying bills month to month. You have rising rents, you have rising employment costs, And meanwhile, it might be a little bit more tough to navigate some of the variables in play right now than some of the larger companies. And yeah, so you have 1 to 20 jobs accounting for losses as well, 20 to 49 jobs inching into the negative recently. February, small companies losing big. I mean, the 1 to 19 jobs, 80,000 of them gone in February, 95,000 gone in April, and 77,000 gone in May. See how that one plays out. Yeah, so Apple's got their Worldwide Developer Conference. I believe it's June 6th, right? When are we talking about here? I believe it is. But they have that coming up. They're going to announce significant changes to the iPad software next week. June 6th? Yeah, I believe it's Monday that they'll be doing that. iPad's next major software update, the iPad OS 16, will have redesigned multitasking interface that makes it easier to see what apps are open and switch between tasks. One of the other things I was reading about is that the lock screen on your iPhone may start to get a little bit more real estate. Maybe you start to use widgets that might be available. Right now, it's basically date and times. The only thing that's showing up there. You don't have widgets on the lock screen until you get into it. But that's something that may be coming down the line as well. They'll probably release the beta version of that when they come out on Monday. Let's check out how Apple is trading right now as Tesla gives it up. Yeah, be careful of that one, folks. Like I said, any other universe, that CEO is getting pummeled today, man. He comes out Thursday and basically flips everyone the finger that doesn't want to be chained to a desk for 40 hours a week, all right? He did it in the most disrespectful way you might be able to as a CEO of a public company, saying if you don't show up, we'll just assume you quit. Come on, folks. Okay, and then he comes out today, says he's got a super bad feeling. I mean, what's really going on? What are they going to push a filing out that says that, you know, Shanghai ports have crushed their business or something like that? And I don't know what it could be, but you get the point, right? Maybe there's something else going on behind the sidelines, let alone the distractions currently in play for Tesla shares. Jumping back to Apple, though, Apple giving it up off 3.2%, man. That is a haircut, folks. Apple's got 16.5 billion shares outstanding. You're off $5. Apple just lost $90 billion in market cap. You talk about a move, man. Watch out. Let's see how some of these other FANG stocks are trading. Microsoft gets a little bit back on the open, but they're down 1.2% right now. Google shares off 1.6% right now. Let's see how Facebook is trading. Facebook off 1.7% as well. Jumping back to some of the other equities, CrowdStrike, that's a pullback for you, down 6.5%. We jump over to Restoration Hardware. They're positive after some decent numbers, pretty close to in line. Restoration down about 0.6% as the S&Ps just chop around. My dad's been calling it a sideways market. Maybe that's what it is for right now. Maybe the market comfortable with an upper boundary of about 4,200. Where's the lower boundary it's comfortable with? Let's see. Stay tuned, folks. We'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by VISTA Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We have the markets chopping around right now. You have the S&Ps off 1.2%. You're negative by 48 points right now. The NASDAQ off 243. Jumping back to some of those companies with earnings. So Lulu giving it up, man. They had some strong numbers last night, as I was mentioning. You're off $6.26 right now. You're off 2%. You're trading at $2.96 for Lululemon right now. It's tough to imagine what would have happened if they came out with some bad numbers. Excuse me, Kohl's. So Kohl's, story from the Journal out there that the retailer received takeover bids from private equity firm Sycamore Partners and retail holding company Franchise Group. Sycamore's bid said to value Kohl's in the mid-50s. Franchise Group is offering about $60. Kohl's closed Thursday, say that 5 times fast, at $41 and change. Interesting, they got a spike to negative prices there. Not sure what that was to $36. Nonetheless, you're up to $44 initially and back to $42.20. You barely moved a dollar after all of that. They said on their last earnings is that they're actively, taking offers to go private. But the market not quite willing to trade higher right now, as you're at $42, and supposedly the Journal's saying they got offers at $55 to $60. That'd be a quick 30 to 40% gain on this equity, and it's not trading up. So something else is going on there. Be careful. Maybe that's why it spiked lower. All right, so some of the other companies. Let's see. Yeah, we talked about Lulu, Restoration, CrowdStrike, and Kohl's, Tesla, of course, Coinbase. We talked about basically all of them in there in terms of what's going on. So let's jump around to some of the different industries in terms of what we have going on. We'll check out some of the stocks I like to take a look at. Disney shares. So here, I'll share a chart with you that I was looking at recently on a weekly basis on Disney. On a weekly basis, we trade lower, man. And we trade lower on lighter volume. So you go back to really where we have a huge acceleration, where we start the run, you could say. Now, yes, the run started at $80, but maybe you call this a unfair low. Maybe the low is really somewhere around $100 for Disney. You accelerate higher with 146.6 million shares. That's the week of May 4th, 2020. We're going back more than 2 years, May of 2020. Remarkable. And then you look at the bounce we got at the lows here. You trade into that low with 113 million shares initially. You trade into that low with 62 million shares the week of May 16th. Now, you do need a sign of strength in this. Disney, you're off 1.75% with the market right now. You're off about $2, 108.90, off of 203. Uber had quite the day to the upside yesterday. Uber, you're off 2.7%. You put it back to a 5-minute. This thing trades from $23 almost up to 25. Percentage-wise, a huge acceleration. We get back some of it. We put Uber back on the weekly. Didn't think Uber would return to almost almost COVID lows. Yeah, on 1 week you got down to $13, but you take that week out of the equation, and $20 is the low when travel was going to cease to exist. They've built out quite the food delivery business over that time. The travel business, of course, in terms of Uber rides, always there. But man, quite a pop, quite a give back from 64 to 24. Eventually, that company is going to make a lot of money, folks, but they have some headwinds right now, to say the least, for Uber. Airbnb is another one. Talk about a pullback, man. This thing, you had support at about 131. You trade down to 103 recently. You're at 118. Airbnb down 2.5% right now. We jump around to some of the airlines. Delta, just chopping around, man, these airlines. Just chopping right at the 382 with the entire move higher from $17 up to 52. We jump over United right now. United, again, just chopping, right? $44. Boeing had quite a lift at one point earlier this week, delivering some planes. Boeing's only down about 0.8% right now. You got the Dow. What's the Dow down? About 0.8% as well. Yeah, Dow down 0.8% as well. So Boeing right in line with the Dow. You were in a downtrend channel. If I was getting into Boeing, I'd be real careful of how I trade into this channel line. Yeah, that's all the way up at 160. I imagine eventually Boeing will find a bid, and maybe that's the play versus airlines with where crude prices are right now for Boeing. All right, a week from today, folks, my dad, he's got an all-day webinar talking about his trading methodology, timing the trade, from his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. It's $295. You get a month of his newsletter, which is $169. You get his book mailed to you, so physical copy, hardcover book mailed to you, $88 value. Both of those almost bring you to the $295 cost itself. It'll be 5 hours from 9 a.m. till noon. Take a 30-minute break for some lunch for everybody and come back for a 90-minute session from 12:30 till 2. He'll be talking about quality volume, ABCs, Fibonacci's, confluence zones, how to use them when entering and exiting trades, cause and effect, swing points. And like I said, you sign up, you get the book, you get a month of his newsletter. Current subscribers will receive their next month for free, and that will be archived. So if you can't check out all 5 days, you can't be there for the 4.5 hours of methodology, you can go over that as many times as you'd like. Check that out. It's a week from today. And here's the deal. We are capping it at 40. Not sure we'll get there, all right? But if we do, we're going to cap it at 40. And we are ending signups next Thursday to make sure that everybody who signs up, okay, is able to get into the room by Friday morning. So please don't delay until the last second, because we will be ending them. Because as much as we'd like to get those final sales in the door, we want to make sure everybody's taken care of. We want to make sure it's a smooth transition into the start Friday at 9 a.m. And what always happens, folks, we're creatures of procrastination. All of us are. And so I ask you, if you're thinking of signing up, please go sign up early, because even if we don't hit the cap, we are going to end signups on Thursday, because as much as we'd love to take those last signups, it's just not fair to the people signing up, because we do this in our Discord room. It's outstanding technology. You can follow along with Tom. Everyone's chatting. They can share their charts if they want. They can watch Tom's screen live. But we want to, and it is a very simple process, folks, to get in it. If you haven't checked out the Tigers Den, right on the front page as well, $1 for the year. Okay, check that out. Now, if you join the course, you get in there for free. Okay, so just join Tom's webinar. I know it's $295, but you don't need to do both. That gets you in the Discord room. You will be in the Tigers Den, and then you'll be granted basically special access to Tom O'Brien's all-day webinar coming up next Friday, a week from today. So please check it out. Don't wait. We're all creatures of procrastination, but we will be winding that up Thursday night to make sure we get everybody in that room ahead of the start on Friday morning at 9 in the morning. And we got a market right now, folks. It's a great time to be in this market, checking out what's going on when you have volatility. For the longest time, we got no volatility, right? We had a market with the VIX. Almost tough to remember when you back things up on a monthly basis. How about 856 on the VIX? How about the VIX trading at 1142 in November of 19 as we came into the pandemic? How about when you put this thing back just on a 5-year daily to see really right where we were and how quickly things got out of control? We were sitting at 13 and change almost. Yeah, 13 and change, right? A low of 14 exactly on on Valentine's Day. The day before Valentine's Day, a VIX of 14. Things had inched up to 20. Maybe that was a little bit of a heads up there when we had January 22nd, the VIX go from 1231 to 20. The market traded all the way, 1355, said, nah, we're fine. And then things, as we know, got a little haywire in March of 2020. That's an elevated VIX we're dealing with right now. We get the markets. S&P's negative by 55. NASDAQ 100 negative by 250. I'll be right back to finish up the show, folks.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got the S&P sitting down 51 points right now. You're just off the lows. We're trading at 41.23. NASDAQ 100 off 240 points. Watch out today, folks. I imagine the market is a little dicey right now. And to be down 50 points, you were already down 25 coming into that number. I gave you my case at the beginning of the show. We're adding 400,000 jobs a month. We have the unemployment rate at 3.6%, and we have yearly wages rising at 5.2%. If you told me that those are the economic conditions that are conducive to the market reacting to continuous 50 basis point hikes to slow down inflation, I'd say, man, come on. That is a hot, hot economy that is rocking on all cylinders right now. Adding 400,000 jobs a month. Employees are making 5.2% more. Well, what I don't say in that is that they're making 5.2% more and inflation's running at 7 or 8%. So they're losing wealth in that time. That's the problem. That's the problem I see with the market as we trade into Friday. And folks, last Friday we're trading at 4,056. Market 75 points above where we were last Friday. You back things up a little bit further, a 20-day hourly, you see how far we are off the lows of 38.07. Okay, I'm going to back this up on a daily. That is the Fibonacci of the full run. But real quickly, we're moving these Fibonacci levels as we wrap up the program here, putting it back to the 20-day hourly. There's your 38.07 low that we've traded at. I mean, you want to see pullbacks possible. I'm always seeing what's possible. And what gives me a quick glimpse of what's possible is pull up the 382. The 382 is 75 points below where we're trading at right now. That'd be a loss of about 125 points in the S&P today if we make it down to that level. I see a lot of resistance at 4,200, man. This market with everything going on with Fed, you have the Fed vice chair. What happened to the market reacting? You had Leo Brainerd coming out and saying, we are not pausing. We're not pausing. 50 basis points. We're coming with it. The market didn't even balk. We're at 4,200. 4,200, folks, and compared to where this market has been recently, right? 4,200 is June of last year highs. The market wasn't sure we were going to make it to 4,800. 4,200 was up 15% last year. Thanks for tuning in, folks. Have a great Friday. Basil's up next. Larry at 11. Fast Market at 12. Have a great Friday, everybody. Have a great weekend.
Building wealth trading in the stock